topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Good morning, USA. I kind of like that line. It's always a great morning to come to work and be able to get on the air and talk about things that affect truckers, small businesses, everyday, people, and figuring out how to save the most money, make sure you're claiming the right tax deductions, make sure that you're getting every deduction possible when you're filing your taxes, when you're doing your bookkeeping, whether you're self-employed, whether you're running a small business, whether you're a trucker, or just even if you're a W-2 employee and you're trying to find ways to save money on taxes. There's a lot of different tax schemes out there, and sometimes you got to be careful of what somebody's promoting. Sometimes they're just trying to get money from you to see what is out there for you to do to make the most of your deductions. We had some big news this weekend, and it's kind of twofold. One for the nation, and President Trump has talked about tariffs. Tariffs. Good, bad, sometimes ugly, sometimes they're needed just to level the playing field. A lot of times between what somebody is selling their goods into this market, whether they're supported by their government to lower the price, which then affects the price of the goods we have here. Because, let's just take China, for example, and they're sending goods here to the U.S. and it's a communist country, and so therefore everything in the government is supported by the government. And so if they're able to discount and lower the cost of goods they're transporting here to the US and selling them, well, they're undercutting our market here for the goods that are produced in a capital environment. And so when you're dealing with capitalism and you're dealing with communism, it kind of puts them on two different playing fields. So this kind of levels the playing field out. Also, you talk about wage differences. If you've got, sometimes unions involved and they're paying a very high rate, and therefore, the cost of goods that we're manufacturing here are going to have a higher cost than the costs coming in from, let's say, China, where they're have their wages at a lower level. So it's kind of leveling the playing field. And sometimes that can be, also some of our trading partners like Canada and Mexico, and kind of leveling the playing field. Does it cost you and I more money? Yes, and it would. But in the long run, it should help to level the playing field for companies here in the USA and for everybody across the board. So why not, help bring everybody's wages up and, make every product competitive to where it's not undercut, one way or the other. So we kind of got to watch that. Trump says, hey, it's, we're going to have a little bit of pain, but, we've kind of got to look at this to see, what makes sense as we go. The other good news, Trucker Tax Tools, and if you go to truckertaxtools.com, if you're a trucker, Trucker Tax Tools, bookkeeping, taxes for the trucking industry, They had a board meeting this weekend, and it was really good board meeting that we had. And we're coming out with a new basic bookkeeping plan just for you. I mean, this is a low cost bookkeeping only. $25 a week is where it starts. Call, get in. Let's get you started looking at how trucker tax rules can save you money on your bookkeeping and get you the lowest cost plan out there on the market. And that number is 877 966 2477. 877 966 2477. Hey, this is a good thing to get into and go. We got questions coming in. I love questions. It's really good. Alex asked if we can explain the 1099. Who, what needs them, and why are they different than a W-2? Well, let's start with why they're different than a W-2. W-2 is when you are an actual employee of a company. They withhold Social Security, Medicare, federal income tax, state income tax from your check. And the company matches Social Security and Medicare on your payroll. And so basically, you're then an employee. They dictate hours, who, what, where, why, and when to you. 1099, you're a contractor. You're self-employed. So you're going to get a 1099 NEC. That 1099 NEC ends up being on Schedule C. You're going to pay your self-employment taxes, Social Security and Medicare, both sides. So that 7.5% you pay basically out of your paycheck as a W-2 employee, you're going to pay both halves. So you're going to pay basically 15.3% for Social Security and Medicare on your net income from your business. Now, if you're running a self-employed business, or you're a contractor, you're getting the 1099, you're going to be able to deduct all your business expenses. So, you're going to be trying to find every expense that relates to business that is ordinary and necessary in business. And therefore, you take all those deductions, and then whatever the net income is, you're going to have Social Security and Medicare, the self-employment tax applied to that. Then that number comes over, your net income from your business comes over to your 1040, and you're going to be subject to federal income tax on the remaining amount, less deductions like half of the self-employment tax, maybe self-employed health insurance if you've got health insurance, and other tax deductions like your standard deduction and stuff you're going to have on your 1040 that you get to deduct. We got a question that came in from Sal and another one from Penny. Sal says, does this information only apply to the trucking industry or all businesses? Well, we're going to be talking about all businesses. We'll talk about some deductions that are specific to the trucking industry. When we start talking about tariffs, it's going to be imported goods. Those are goods coming in from China, Mexico, Canada, or any other country that is out there. Those tariffs are applied, and that's going to be applied to the companies that are exporting them or importing them into the United States. So those don't necessarily affect the trucking industry, other than it may slow some of the goods down because the cost of the goods itself, companies may not order the goods coming from, let's say, Mexico, China, or Canada. So it could slow a little bit down in the trucking industry, but don't see an immediate impact in any industry, right off the bat. And, usually what we've seen is Trump wins in these wars, and especially when we're dealing with trade wars. So we hope that continues. He's got a pretty good track record. in his art of negotiation, and he's done fairly well. You can see that through his dealings with, let's say, I think it was Colombia or one of the other countries out there where he was taking the illegals back and going from there. So we'll see what happens when all this stuff goes on. But like I've said, if you're self-employed, whether you're in the trucking industry, whether you're a consultant, whether you're running a small business out there, you should be, depending on who you're doing work for, receiving a 1099 for any income they give you. Those will not apply until they've paid you $600 as an independent contractor. You, as a self-employed individual or a small business, if you pay an individual $600 or more, you would issue them a 1099 NEC as well. So non-employee compensation going out there. There's many other forms of 1099s that are out there. Penny asked a question on those, and we're going to get into those different versions of the 1099s when we come back right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, getting into questions that have been asked, Alex, to further explain who needs them and why. Well, the IRS requires it. If you've paid an individual money, you need to issue them a 1099. Now, there are other 1099s that are out there. Penny was asking, what are the different types of 1099s and what are the differences? Well, you got probably about 10 different 1099s out there. You got a 1099B, which is the proceeds from broker and barter exchange transactions. These are usually issued by your brokerage companies that are out there. But if you're doing some barter transactions and somebody's reporting it, they would do it on a 1099B as well. 1099 DIV, dividends and distributions. So if you've invested in, let's say, Exxon, and you've received dividends, they're going to issue 1099 DIV. Also could be part of just your brokerage account, and they would issue that 1099 DIV with your brokerage statement as well. Banks or anybody else you would have received interest from would do a 1099 INT. It's your interest income. Banks only generally issue this if it's over $10. 1099R, these are your distributions from your retirement accounts, pensions, annuities, profit sharing plans. Insurance contracts are all going to issue these 1099Rs. Some of these may be taxable. Some just could be a rollover. So you got to watch the codes that are on those 1099s. So when you're going through and reporting it, you're going to want to make sure you report it correctly. 1099Q. Those are going to be payments from qualified educational programs, 529 accounts, stuff like that. 1099-S is going to be proceeds from real estate transactions. So if you sold your house recently, you should be getting this 1099-S. And then 1099 miscellaneous. It's kind of a catch-all. You're going to see royalties on their rental income that's paid to you if you got paid for rental house. And of course, the 1099 NEC, which is the non-employee compensation, 1099K. These are payments from third-party network transactions. So if you're accepting credit cards in your business, you're going to get a 1099K from your service provider out there. 1099G is going to be various government payments. Those payments, when you've paid in your taxes, maybe got reimbursed for overpaid taxes, they may send you the 1099G. And the 1099C, which is cancellation of debt. So when a company cancels your debt, it's income to you. Now, there's sometimes ways to get around it, but it's considered to be income as well. So we had another question come in. Jake, what if your company is producing things for another company? Is this 1099 or another form? It's going to be 1099. They are going to send you that 1099 NEC. Now, it depends on how your company is structured as well. If you are an Inc., they may not issue that 1099. But more and more companies are producing and sending out 1099s regardless of how you are structured. Because at one point, the IRS was starting to get to the point where everybody was going to be issued 1099s for any payments that were sent out. The IRS loves going through and doing matching. Believe it or not, their system has gotten so sophisticated that it goes through and matches what your income is on Schedule C to what they've received for 1099 NECs. Same thing like rental income, royalties, dividends, brokerage stuff is all now matched these days. And then when something doesn't match, guess what? The system generates and sends out a letter. So, you're going to want to make sure that, what you've got coming in matches or exceeds what the IRS has. Now, there's income you receive that don't come on 1099s sometimes, obviously. That income is supposed to be reported as well. So if you've reported, let's say, $150,000 in gross sales, but you only received $100,000 in 1099 NECs, you're probably good because your number has exceeded what the IRS received in 1099s. However, if you've only reported $75,000 and you got 1099s for $100,000, you got a $25,000 difference, and they're probably going to send you this letter saying, hey, you've got a problem, and you have to explain it. Now, maybe you only receive $75,000. So you may have to go back and explain that, hey, this is all you received, but you better be ready to prove it. You better be able to show your bank statements to be able to show this is the amount of money come through. Now, if you're in the trucking industry, the trucking company is going to send you a 1099 for your gross trucking income, even if they deduct from your settlements your truck payments, insurance, scales, tolls, anything else they're deducting from your settlement statements. Those are expenses for you, and you should be recording them expenses in your bookkeeping and in your financial statements and showing the total amount of gross trucking income as your income. So you want to make sure you have your items correct on your taxes when you're going through and preparing taxes. Some of the things we wanted to get into talking about is some of the challenges that affect small business owners, owner-operators, truck drivers. If you're running a business, and it doesn't matter whether you're owner operator, truck driver, you're a consultant, maybe you're a business owner that does manufacturing or retail. These challenges are kind of common amongst everybody. And it comes down to sometimes, lack of funds. Nothing can hold you back like lack of money. That's both business and personal. Money can create problems, not just for the business, but also at home. And this is sometimes even more true for you as a small business owner. Large businesses most of the time have enough cash flow to keep up with payroll and keep the lights on and keep going. You as a small business owner operator, sometimes that cash flow gets tight, and it's harder to sometimes keep that truck on the road, keep those doors open, much less hire one more employee. If somebody fails to pay you timely, it rolls downhill from there. Everything else becomes harder and harder as you go. So sometimes cash flow, sometimes you end up moving towards factoring invoices. And then again, that affects cash flow because they're taking money from you. It may sound like a really small percentage when they're taking 3%, but they're taking 3% to factor an invoice for 30, 60, or 90 days. And sometimes that's a higher percentage than you actually are thinking that's really out there when you're doing it on a consistent basis. And sometimes it's addictive. So you've gotten into that situation where you've got to continue factoring. And sometimes you just got to wean yourself off of factoring to do it. And this goes for any business out there. There's many stories out there of businesses, and especially small businesses, failing in those first, year, 2, 3, 5 years. Go back and listen to one of our other podcasts. Go to taxtalk4u.com and go and look for the podcast on business planning. Hey, you're in business. Maybe you've already started, but it's not too late to get involved in putting together a strategic plan for your business, how you're going to grow, how you're going to achieve the things that you want, you desire out of your business. So go back to taxtalk4u.com and see the podcast on business planning. It's a great way to get started or recommit yourself to planning in the business. Hey, something else that affects, small business owners, lack of time. Now, if you're an owner operator, you know what I mean. You're on the road constantly, and you don't have the time to do bookkeeping. You don't have the time to look at doing taxes. You don't have time to sometimes even spend the time with your family because you got to be on the road, keeping that truck moving. If you're sitting at home doing nothing for a week, that's a week's lost revenue. So lack of time because you're working your business or you're working in the business. And sometimes you're doing both. And it takes away from time from doing planning, making sure you got your collections, especially if you're an owner operator with your own authority out there and you're doing invoicing, you got to have somebody out there doing invoicing for you or collecting invoices for you. Otherwise, you're resorting to factoring and you're losing, a 3% on every invoice or 2% on every invoice or whatever they're charging you with the factoring company that you're out there. And if they're full recourse and they don't pay, guess who pays? You. So you kind of got to make sure you've got the time to deal with the type of business that you're in. And sometimes it's not feasible to hire somebody to go out there and do collections, to do invoicing for you. Sometimes there's other opportunities and ways of doing it that's going to save you money and save you time down the road. But it's all impact for your business while you're running your business. And so you need to be really aware of that. And when we come back right after this break, we'll talk about some of the other things that affects you in small business. We'll be right back after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, speaking of keeping on trucking, again, go to truckertaxtools.com. Look us up. Take a look at what we're offering now. We just finished having a great board meeting this weekend, figuring out what we're going to do for you, the trucker, owner-operator on the road with a lack of time, sometimes a lack of money, but you need to find every deduction. You need to figure out how to save the most money on taxes, reducing that Social Security, Medicare, self-employment tax, reducing those federal income taxes, putting more money in your pocket to keep you on the road, to keep you from having that lack of funding maybe you need as well. Has some great new basic plans out there, bookkeeping only, starting from just $25 a week to make your life easier while you're on the road. A couple other things to talk about small businesses. Did you know there are over 30 million small businesses just here in the United States? And it accounts for over 46% of all jobs in the United States. That's a whopping total. I wasn't even aware of those numbers right there. So sometimes you got to really think as a small business person, whether you're maybe retail or restaurant or even a trucking company looking to hire people, you have trouble finding good employees. And that's sometimes really difficult today. Do people want to get out of the house? Do they want to work? Some people have found it easier that, hey, they just want remote jobs, and knowing that they only work maybe 60% of the time. So sometimes finding those qualified, hardworking employees isn't easy. And sometimes the demands of having a employee become very stringent on the company, and it becomes very difficult because now all of a sudden maybe you're having to do payroll, pay payroll taxes, withhold federal income tax from the employees. Maybe you got to pay them extra benefits. Maybe you're trying to pay health care or do a 401k from. These are all costs of running this business and having these employees. And sometimes people don't understand when you hire your first employee, that money comes directly out of the owner's paycheck. Bottom line, comes out of that owner's take-home pay until that employee can support himself because they brought in more business, or you were able to expand the business to cover their salary. And then you bring in the second or the third or the fourth or the fifth employee, each added employee, until that employee can support itself by the growth of the business, is an expense directly out of the owner or owner's pocket. And so finding those good employees and then getting the business to expand is the hard thing. And sometimes another difficulty that comes with this is the balancing growth and quality. Are you getting the quality employee to be able to get the quality growth you want or need in your company? And it's something all small businesses face. We deal with trucking companies at Trucker Tax Tools, and we've got people in this industry that decide they want to bring on more than one truck, 2 trucks, 3 trucks, 4 trucks down the road. And it's finding that owner operator, that employee that you want to bring on that can handle driving that truck. And if you're not effective at vetting those employees that are going to be driving those trucks for you, sometimes you get a truck driver that maybe has a drug problem or a drinking problem, or can't drive and has had accidents. Check them out. Do your background check. Do your due diligence. Just like us in this industry, we're required to do due diligence on tax returns for EIC, earned income tax credit, child tax credits. Even when we're doing Schedule C for small businesses, we've got to do a little bit of due diligence out there. And then you've got to learn how to manage these different challenges that you face in your business. Now, some of the things that other people face, and especially when you are self-employed out there, you need to be aware of things that are going to continue to affect you. Outside of these problems, you're going to deal with tax problems. Did you make your estimated tax payments this year? See, when you jump out in a small business, and sometimes you may have been in business for a couple of years and nobody's ever really told you. Maybe your tax preparer doesn't communicate. The tax company that you're working with doesn't communicate. You should be making estimated tax payments every year. Estimated tax payments for you is kind of like your withholding taxes. So when you're running a small business, self-employed, you've got to make sure you're making your quarterly estimated tax payments. Now, when we do estimated tax payments, we base them off of the prior year tax return, first and foremost, so that you're making sure you're paying in the minimum amount required by the IRS based on, for 2025, is going to be based on 2024's tax return. And then if your business is down, then we can change your estimated tax payment to be lower based on actual, or maybe you're seasonal employment, and maybe you do most of your sales towards the end of the year, then we can change your estimated taxes to follow how you actually earn your income. Otherwise, those are due pretty much evenly over the quarters. Now, if you're a small business and chose to be an S Corp, or maybe you're LLC and choose to be an S Corp, or an Inc. to be an S Corp, you will have payroll, and you'll have to pay payroll taxes in, and you can use payroll to calculate and pay your estimated tax payments through your payroll as well. If you're a partnership, LLC, multi-member, you're going to use guaranteed payments, but again, you're going to have to make estimated tax payments personally for the income you're deriving from that LLC or partnership that you may belong to out there. So if you're avoiding self-employment tax, you're avoiding those estimated tax payments, you're going to get penalties at the end of the year when you file your taxes on your tax return because you didn't make the proper estimated tax payments. So just got to remember that when you're going through and filing your taxes. So here's a few things that affect the trucking industry. So as a trucker, whether you have W-2 and a 1099 because you made the transition mid-year from employee to independent contractor, or maybe you're a part-time employee of a company and an independent contractor at the same time, you've got to file both of those documents as part of your 1040, your W-2s, of course, and your 1099s on Schedule C. A lot of times we see drivers that move from being a employee driver, company driver, to a self-employed driver, and they forget they had the W-2 at the beginning of the year. Sometimes those things get overlooked, and you don't want to overlook those things. So make sure if you're talking with somebody, you have those items covered on your tax return. And again, if you're a trucker, get a hold of Trucker Tax Tools. Let us help you save you money. Go to truckertaxtools.com. We'll give you a free consultation, and also a free guide and tools that help you not worry about your taxes again. But if you want that free consultation and you want to talk about that low-cost trucker bookkeeping, call today at 877-996-2477. 877-966-2477. Get in there and call us today. When we come back right after this, we're going to talk about another big mistake small businesses make: choosing C Corps, S Corps, or Schedule C. And we'll talk about that right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, we deal with small businesses, all across the country. And, we see this, whether you're in the trucking industry, whether you're self-employed, no matter what kind of small business you're running, we see this mistake quite often. And, we see CPAs, we see tax accountants, we see bookkeeping firms, we see tax preparers talking about the benefits of a C Corp or an S Corp, and making those elections for your business. We like to see a 6 to 12 month history before we tell you, hey, this is where you should be. See, jumping to a C Corp, S Corp, whether you're an LLC, whether you're an Inc., right off the bat adds a lot of administrative costs. You've now got to do payroll. You've got to have a reasonable salary for any owner that's working in the business. And that 6 to 12 month history for your business helps us evaluate where your business is, where it's going, and what this kind of savings you would have going and being a S Corp or even a C Corp, or even maybe adding your wife or husband to your LLC and being a multi-member LLC. We want to look at that because sometimes there's no reason to have those extra administrative costs to your business. And so, what we want to look at is what your net income is, what your gross income is, how you're operating this business to determine, is there enough savings by going to a S Corp for you as an owner? We also look at it, is there some benefit to go to a C Corp? And I'll tell you now, most of the time, we're not going to recommend anybody become a C Corp unless you're looking for a lot of extra benefits that you're going to give yourself as a business owner. So one of the ways we use C Corps is you get a reasonable salary, and then we throw out a huge benefit package to where the company's paying for your insurance, the company's paying for your deductibles, the company's paying for your IRAs or 401ks, and they're making a huge contribution into it. And, maybe that is the way we go through and do this. But you got to remember, if you're taking distributions from a C Corp, those are considered dividends and those are after tax. So your company pays its tax and then it makes a dividend to you and then you pay tax on that as well. So double taxation gets out there. So it is not likely we throw a C Corp out there. Most of the time, it's going to be an S Corp or possibly a LLC, multi-member. If you're married, S Corp. If you're not, there's some advantages to doing that. Something else that we see happening in the trucking industry, but also happens in other self-employed industries, is taking the mileage deduction incorrectly. Now, your semi tractor, you're driving it down the road, you're paying for fuel, you're getting your depreciation, you're paying your insurance. We don't take mileage deductions. We take actual expenses for that tractor. Now, your personal vehicle that you use for business, to go pick up supplies, parts for the truck, any business use of it, we tell you to keep track of that mileage. And therefore, we can take that mileage deduction for you as an owner operator on Schedule C. Now, as small business, sometimes you're leasing a car or truck that's used directly in the business and only for business. Yes, that may be a good vehicle to take actual expenses on. If you're using a personal vehicle in business, then maybe it's taking the mileage deduction and not actual expenses because you may be using it more for personal use than business use. So we kind of weigh this out and got to look at it and decide which is the right way to go. Another big mistake we see in business: when you go into business with somebody else as a partner, as a multi-member LLC, and you're operating without a partnership agreement. Now, I'm not a lawyer, never wanted to be a lawyer, don't charge legal fees, but this is a good time to get an attorney involved. Get them to write a solid partnership agreement. What does a partnership agreement do? It basically breaks down responsibilities of the company, responsibilities of the partners in the business, and will help take care of compensation issues of the partnership because it gets settled in this agreement when it's written correctly. Helps you have a solid foundation, a good relationship between all partners, and all partners knowing what they've gotten into from day one. Hopefully, solves the fights and disagreements by deferring to what you guys agreed to in this partnership agreement. I have seen many partnerships fail. Kind of the same as I've seen many good marriages fail. Partnerships out there because somebody is working harder in the business than the other person can cause great dissatisfaction between partners and can cause a huge breakup in your entity and impact your business and your livelihood. I've seen a company who was hugely profitable. One person was completely upset because he did all the sales and felt like he wasn't being compensated fairly for the work he was doing, bringing in all the business. The other partner was handling all the back end side, the accounting, the bookkeeping, the financing, the moving of goods to meet the sales over here. And the sales guy decided he could do it all himself without this partner. because he felt like he was giving him way too much money for what he wasn't achieving. We couldn't save that partnership out there. The sales guy ended up buying the other guy out. The other guy set up his own company, was just as successful. The sales guy, not having the background of finance in the back, was struggling. But he could have solved this by changing the way the compensation was. The guy that had the finance business, yes, he was successful, financing and continuing to run the business, but it was nowhere near as good as the business that the sales guy had. And so there was a negative impact out there. If they would have just changed compensation, maybe that would have helped alleviate the problems between one business partner and the other. Same may be in a trucking business. One guy's out there really hoofing it in a truck. The other guy's dealing with the stuff in the back office and getting things run, but he's at home with his family. The truck driver itself isn't happy because he's out there hoofing it, and the other guy's sitting at home. So sometimes you got to figure out ways to level the playing field to make things better between the two. Same in any other business that's out there. Make sure you have a partnership agreement. Make sure you have things in place. And I always love this one. We all go to meetings, or maybe we all get gas, or maybe we're a truck driver and getting fuel, but listening to truck stop, bar stop, wherever you may be, you go to those truck stop and you listen to the accountants at the fuel pump. You listen to the at the bar. You listen to the bar guy accountant who thinks they know everything. Gives you their recommendations of, hey, this is what it isn't always correct. It gets people more in trouble. I've heard it. Hey, Johnny over here that I met at Pilot, Flying J, told me he hasn't paid taxes in 5 years. Has he done his tax return? Well, I don't know. But he hasn't paid. Nobody's trying to collect. It doesn't make it right. These guys and what you hear at the fuel pump, at the bar, when you're talking to somebody, they're not the experts in this industry. They're not the experts in your industry. Find the expert in your industry. Find the enrolled agent. Find the CPA. Find us at Trucker Tax Tools, your trucker CFOs that know trucking inside and out. Hey, if you haven't filed in 5 years, hey, that's a good time to call Taxation Solutions and get tax relief. Stop the IRS at 888-930-1016. Again, 888-930-1016, and put a stop to tax problems with some tax relief. Just because you listen to the bar stop accountant, the bar stop CPA, the bar stop enrolled agent, the truck stop CPA or accountant or bookkeeper, they don't know what they're talking about. People that are experts in the industry absolutely do. That's where tax relief, getting the right information in your hands as a small business owner is important. Hey, these podcasts over at Tax Talk for You are there for you every day. Jump on Tax Talk for You. Get to the podcast that means something to you, whether it's talking about estimated tax payments, talk about self-employment tax, business planning as a self-employed individual are all important to you. Hey, if you got a friend or family member that needs information as a business owner, as somebody that owes taxes, get them over to Tax Talk for You. Subscribe to us. Let us help you help yourself and save your business. And we're always here every Monday on W4CY Radio, 10 a.m. Eastern Time. Join in. Get this out to your friends and family. If you're talking at a fuel pump, give them us at taxtalk4u.com. And we'll be right here next week, 10 a.m. Eastern Time. Thanks. Have a God-blessed and glorious week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalk4u.com. See you next week at W4CY.com.